Hey everyone, welcome back to the Mark Loeffler Experience. We've got our good friend Andrew Hines back. Welcome, Andrew.
Hey, Mark.
We're going to be talking, well, what we do every month.
Yeah.
We're going to be talking about what's the real estate market going to do? Is it real estate summer or is it real estate winter?
It's kind of seeming like it's turning into real estate winter in the summer.
Yeah,
So,
is this like Game of Thrones? Is winter
yeah.
coming?
Yeah, winter seems to be coming. So some opinions that I've heard is that the market kind of got pulled forward, right? In the winter, it was kind of summer, everything was hot. Now we're starting to see a little bit more inventory come on board in several markets. There are still many markets in Canada that are red hot, but a little bit more of a balancing, not so much a correction. But I know you were telling me before we started filming that you're seeing a couple of areas where prices have actually come down a bit.
Yeah, well, we've come off our highs.
Mm-hmm.
And I know you said to me that might be the stress test in action, and I thoroughly disagree. I just don't think that the stress test is that important, and it wasn't that much of a change. And going through the numbers on the video I did on the stress test, which you guys can check out after this one, it didn't make a lot of sense. Like, okay, yeah, at that time it bumped it up. There was a huge run up in prices that was caused by the stress test, and then basically it fell back to the mean.
Well, are you referring to the previous stress test back in like 2017?
Yeah.
I know the market was red hot before that, and we did see a little bit of a correction in many markets after that.
Yeah, but we saw panic buying into the stress test.
Yeah, into the stress test and then coming back.
And then out of the stress test, basically what it did was it sucked up all the inventory and all the buyers, and then everybody said, "Oh, I'm good now," and then we fell back to the mean. And then we continued just going up from there.
And one argument I could see why the stress test wouldn't be such a big deal is I feel a lot of our base of Canadians that are buying properties right now, especially in major cities like Hamilton, Toronto, London. I mean, the average Canadian can't really afford those right now. So it's the wealthier that are already buying them. So yes, it's going to have some impact, but a lot of these people, it's not going to be as much of an impact as it is on the middle class of Canada.
Yes and no.
Yes and no.
I mean, we've helped a lot of 20-somethings buy real estate in the last month.
What we were just doing before we got rolling, the calculation, what does it cost? What does it cost to buy the average house in Hamilton? So I just said 700 grand, even though the average is actually higher.
It is higher.
Yeah. So the average house, if it was 700, you'd need approximately $200,000 household income with no other car loans, nothing, no credit card debt, no other loans of any sort.
Well, and I ran the numbers on another one, and it was so if you had 20% down, then you needed 100,000 to buy 650.
Right. So 20% down it's a big thing, and this is where a lot of Canadians struggle with this, especially the ones that didn't get into real estate investing in their younger years like we did, where you could benefit from the appreciation of your real estate and use money to buy more.
All I'm going to tell you is the bank of mom and dad.
The bank of mom and dad is going to become more and more important. And I think that there's a huge reliance in Canada on parents to gift some of their equity, or if they have cash saved up, to help their kids put down 20%, especially now, if you want to have an even realistic chance of buying the average house.
And then, like, these 20-somethings that we helped this last couple months, none of them had help from their parents.
No?
No.
So what kind of people are you seeing that can afford, and where can they afford?
I mean, they're not buying 700,000, they're buying 500.
Okay, so the below average. They're just getting a foot in the door.
Foot in the door, but a lot of them are house hacking. So they're buying stuff that has 2 units, and they're making it work, and they're saving up their down payments. And so this is the argument, right? That the next generation won't be able to buy.
They'll buy differently.
They'll buy
they'll buy the house hacks, the secondary units.
How is that different? That's how I bought it.
House hacking, yeah. I mean, less pressure to do it when you did it, but...
Well, I guess. I mean, I could afford the $285,000 house at a 6.3% interest rate that I got at that time. But, I mean, why the heck did I want to do that when I could basically almost live for free?
I love that idea. If my wife would have gone along with that, we would have done that too.
Wow. I mean, duplex in Toronto, I mean, that's what we were all living in back then, right?
Yeah.
So that's, Why do we always blame the wives? My wife watches this too. She comments on it when I said something about teachers last time.
Well, you know what? It's funny. Like I just have a very I grew up very differently from my wife, and going through my struggles and early in real estate investing. I've told the story on my podcast how I used to sleep in my house, I sleep on a stack of drywall. I was cool with all that. My wife would not have done that stuff.
Yeah.
So just kind of a different standard.
Fair enough. All right, let's go back to the real estate here. So housing market moderates in May, right?
Yeah.
We're actually seeing listings come down. So listings fell back 6.4% from April to May, and then national home sales declined 7.4%. So
the amount of sales
declined faster than the listed properties.
Meaning that we're getting a little bit more inventory overall on the market.
Yes.
Okay. So that's naturally going to help, right? If we can get Canada up into like a 3 to 6 month range of inventory, we're going to actually start to see a much more balanced market, maybe even a buyer's market, which would probably drive the prices down a bit.
Well, that's, I mean, I think that's what a lot of our viewers are hoping for, right? That a lot of people are waiting and, watching and waiting.
Yeah. Which, I mean, I think we're going to probably talk about, should they be waiting and, or should they be striking now?
Well, as you can see, like we went up huge above the monthly home sales, like the 10-year monthly average. See, like 2016 was a high before, and then we ran into the stress test here.
Yeah.
And then we had that huge dip because of the stress test. And then we had the huge dip last year.
Yeah.
And here's the thing. Like you look at that and say, okay, those 3 months, we did 30, 15, 30, and then we came back up above. So some might argue that we're just filling that inventory that we had from last time.
Okay.
And we, I think we're just going to revert back to this mean of 40 to 50,000 homes per month.
Yeah. Getting back to the mean would be nice, but I don't see how we do that until we can get interest rates back up and slow the market down a little bit. Obviously, we know with all the money printing and then low interest rates is pushing this market.
Well, I mean, again, if you watch the video I did on hyperinflation, like the money supply is a hockey stick right now.
Oh yeah,
like it's up 500%, like in months, like not years, in months. But that's even starting to slow down now too, right? Yeah. We're starting to see the supply of money come down too.
Which, hopefully it'll help a little bit, just normalize the market.
So here's the listings to new ratio. We're coming up a little bit. So we have 2 months of inventory overall. We're selling 75% of every home that sells right now, as opposed to 90% earlier in the year. That was December, obviously. So we're coming back to more like the market was, last summer.
Yeah. Hopefully it's going to balance out a bit more, but it looks like we still got a ways to go here.
And if this is to believe, it looks like the average price dipped a little bit too. And like anecdotally, that's what we're seeing. That's what I'm seeing. Like we just put a property under contract that I did the numbers on, and I think a month and a half ago would have been about 1.35, and now we got it under contract for less than 1.3.
And I think the big thing there is when you have a bidding war with 10 different, and 10 different people are bidding, you bid more aggressively than when it's just you and a couple others.
Yeah.
So I think that's the big difference that would change, prices by 50,000, because when people get emotional, they can spend an extra $100,000 in a hurry.
Well, I mean, if they've lost out on 5 other properties, then
they're just at their wits' end. Like, just end it already. We'll pay whatever. People hit that point.
I'm going to be homeless.
Yeah.
That's a very real concern. I've sold my house. I'm going to be homeless.
Mm-hmm. Not everybody's cool living in their car.
No. This is just year over year change at average residential price. So you can see, obviously, Canada as a whole, basically driven by Ontario. So if we're in Ontario, that's, we're driving Canada prices. BC, like it's not as nuts. What people do.
So we're just to take this in, 40%, almost 40% overall increase in prices year over year.
Yeah.
That is wild.
It's come down a little bit because last month was higher.
That is insane.
Yeah, and it can't continue, right? Like you look at like Newfoundland's up over 20% year over year. Mm-hmm. And like they're not doing well economically out there, right?
No.
PEI, Nova Scotia, New Brunswick, Quebec, Ontario. Now, I mean, you got the prairie provinces haven't done as well. I mean, they're still up. I mean, that's 14, 15%.
Yeah.
if I was in Winnipeg, I would still like that free check that
Yeah.
that the government just gave me.
I'm curious when I look at this, it kind of makes me think that the people who used to afford Ontario, the good hardworking people of Ontario, are now going to be thinking about becoming residents of places like Newfoundland and Nova Scotia. And
So, I mean, my neighbor at the cottage, he's a realtor. He just sold a house for friends of his in Toronto. They sold for like 2.1 million, so it was probably like a semi-detached two-bedroom house, and they moved to Nova Scotia.
why
They
not?
they bought a brilliant house for $700,000 in
Mhm.
Nova Scotia, and they fully expect never to come back to Toronto because they're like, we don't think we'll ever afford the prices there again.
And doesn't that make perfect sense, especially for those in retirement age? They've got a big nest egg in their house, and they want to be able to live a little bit more lavish retirement. Sell the house here, move out to a province where you can make your money go further and
Well, I mean,
enjoy
they're
life.
not in retirement age.
Well, so they aren't. Yeah.
They have young kids.
Are they going to work remotely?
I didn't get that far down the
Yeah.
rabbit hole. But
I mean, I'm wondering how many
I
people.
think so,
Yeah,
yes.
I'm curious. And I think that there are some employers that would accommodate that, especially with this, the more working from home that we're seeing.
One of the people I run with, they
Mhm.
sold outside of Hamilton here, and they went to Alberta.
Mhm.
And husband's like a journeyman electrician, right? So
Yeah.
master electrician, so he can get work anywhere.
Right.
And she works as an accounting for a major union, and she
Mhm.
basically said, "Listen, I'm going to either work
Mhm.
from home, and I'll travel here once every 3 months or whatever. Yeah, she's like, if not, I'll just get work out there or not." And
Yeah. So seeing this, I know we both talk about New Brunswick and Alberta as being pretty solid opportunities. Alberta more so, just because it's got the oil. Is there any other province that stands out to you as a real opportunity?
I mean, if you're going to look at that's commodity based, I mean, Saskatchewan obviously has oil, potash.
Yeah.
Like the potash is just came out recently and said that they're gonna mine that much more because of world demand,
Okay.
and they're gonna have their best year ever. You know,
And relative pricing in Saskatchewan is quite a bit lower, except for when you're right in the downtown of Regina and Saskatoon. Their prices are getting pushed up a lot
and
too.
to be honest with you, I've looked out there. I just haven't found anything that I
Mhm.
liked as much as I liked Edmonton.
20, 30 minutes outside of either the big cities there would probably be something worth looking at.
Yeah. I mean, there's a lot of people out there that are making good money in those areas.
Mhm.
Like for sure. I haven't found for economies of scale for myself
Gotcha.
to be able to do that. So, I mean, so we were talking about obviously the trends and all that. I mean, this is Hamilton. The month over month change is 1%. Quarterly change is 0.3%. And
Down, yeah, both downward in terms of average sold price.
average sold price,
Yeah.
right? Where the year is 32% now.
Which, as we said, nothing really to read into too much there. It's just a little bit more of a balancing and less emotional bidding, most likely contributing to that.
Yeah. And I mean, when you say average price, it's kind of a misnomer because in like, especially some smaller markets or whatever, like in Hamilton, there might be a $5 million house that sells, and that
Yeah.
skews that average
Absolutely.
because not a $5 million house doesn't sell every month in Hamilton, right? And I don't know if that's what happened, but you can see there was actually the little dip, and then so that's why averages, and it's
You can actually look at the subcategories here too, but I do know what you're saying because there's not really that many sales in a month. I don't know, it'd be like in the thousands, low thousands.
1,607 new listings. Hamilton is 11 days on market. 713 homes sold in the last 28 days.
Yeah, so you're right. A couple of outliers could throw a number a bit.
Well, and you look at that, like you say, 1,600 listings, 713 sales. That's less than 50%.
Yeah.
Right. So right there, you're seeing more stuff come on the market and less stuff selling.
Yeah, that's actually a great sign for the future. So that, when we would expect to see the hot spring market, hot summer market, we're actually going the other direction here. We're getting more new listings, less sales. So if for anyone who has been waiting, maybe there are opportunities coming up.
So like that brings us back to that age-old question is, people are sitting on the sidelines waiting. Should they buy?
Yeah, I mean, we have our our wisdom, and I know we both might sound like a broken record here, but I mean, it is such a personal decision, right? You have to know that you're comfortable riding things out, and it could take 20 years. If things go bad, are you comfortable living there for 20 years? If your house is underwater, I mean, these things could all happen. As an investor, it's easy for me because I look at it, and if my cash flow isn't substantial enough to survive, a reduction in rent or any of that, I'm not going to buy. And when it's your home, you can make a slightly different decision, but you do have to be willing to wait it out.
Yeah. And by the way, so I just pulled up Windsor for whatever reason, and I'm just wondering if these stats aren't correct because it says 581 new listings and 14 homes sold. So
what's the date on it? Yeah, no, May 16. For some reason, Zillow stopped tracking London. They stopped tracking a whole bunch of cities.
Oh. Anyways, so I mean, back to that point about 20 years. My aunt bought in Toronto at Main and Danforth in 1992 at the peak of the market.
Mm-hmm.
She bought it for $189,000, no, $285,000. And 3 years later, it was worth 180 or 200,000 or something. But again, they didn't sell until 2018. And then when they sold in 2018, I mean, now it'd be worth a heck of a lot more, but it was like $700 and something thousand back then, right?
Yeah.
And, they moved out to a cheaper locale for...
We're definitely going to see that trend continue. That's why keeping an eye on the smaller markets outside of cities in Ontario, as well as the markets in the other provinces. I think any low price market is poised to see some growth just because people realize my money can go further. But absolutely, regarding the volatility of pricing, you have to have the stomach for that as a homeowner or an investor. I've heard the expression real estate's a yo-yo on an escalator. It's going up and down as it's going up, right?
Yeah. All right. Well, so again, should people be buying in this market?
If you can find the home that you're willing to stay in, yes. For me, I like looking at things like land right now. I think there's a lot of, if I can get myself 10 acres, I'm interested in that because I can build on it later. If I have a little extra cash sitting around, that's something I'm inclined to want to buy because there's multiple uses too, right? It could be potentially used in farming. Depends on what your zoning is, but that's something that I'm really open to right now, and I'm specifically thinking markets that are a much more affordable price point than GTA.
So you're getting a land bank.
Yeah, I wouldn't mind doing a little bit of land banking. Obviously, that's a piece of the pie, not the whole thing.
Yeah. Comment down below. Let us know what you guys think. Are you buying right now? If you guys want to have a further discussion, hit me up on Instagram. Hit Andrew up on Instagram. We'll put his link there too. All right, everyone. Thanks so much. We'll catch you next time.